Hello, everyone. Andy Jacob here with the DotCom Magazine Entrepreneur Spotlight Series. What a show today. You're going to want to watch this show because there's so much to learn from the entrepreneur I brought on the show today. His name is Mr. Dieter Marlovics, and he's the CEO of RoboSig. And I'm going to give you a little teaser. We're going to be talking about something called alpha today. And alpha is really important, especially when it comes to your money. If you're an investor or someone that wants to sort of think about what to do with your money, where to invest, how to be a safe investor, we brought the right guy on the show today. Dieter is the CEO of RoboSig, like I've mentioned. Dieter, welcome to the DotCom Magazine Entrepreneur Spotlight Series today.
Thanks, Andy. Appreciate it. Thanks for having me.
All right, let's go. So I've got you on the show. I'm so excited to have you. Let's pull the lens back to 30,000 feet. Let's tell the people what you do at RoboSig, maybe give a little bit of a tease on what you do with this alpha and what it's all about, and then we're going to get into it.
Sounds good. So to start with, alpha is the return you make on your money, right? If you invest $1 and you take away $1.15, your alpha is 15 cents, right? Which is 15%. That's a pretty good return. So at RoboSig, we have developed an autonomous currency trading strategy, right? It trades all G7 FX. And what differentiates us from other trading strategies primarily is our risk profile, and it's a lot lower. And, just to give a perspective here, we are not a fund. We are not an asset manager. We are a software company. We don't manage other people's money. We have partners that do that, and they believe in our strategy, and we partner with them to license our software for that reason. So if you were to put money with a hedge fund, though, world-class Sharpe ratio would normally be about a 1, right? It's usually 0.7, 0.8, and give or take, depending on which hedge fund you do business with. Ours produces a Sharpe ratio of 1.5, and sometimes higher, but depends on the time of year and month and what's going on in the world, obviously. But that's the big differentiator, and we're not high frequency trading. We trade maybe 10 times a day and hold positions for 5 to 7 days. So we're, it's a little bit different. When you hear autonomous, you think, high frequency, but that's not what RoboSig is.
Yeah, that makes all the sense in the world. Of course, you're a software developer and you specialize in really issuing a systematic and market neutral currency trading strategy that's coupled with automated risk management, if I can say that, as well as trade, execution tools. Let's talk about who uses it, who reaches out to you and they say, hey, we've heard about RoboSig. We want to incorporate it into our program.
Right. So our partners are asset managers, investment managers, hedge funds, family offices, anyone that wants to put their cash on the strategy in the currency market could use RoboSig. If you're partnered with, for example, if you were to do business with an asset manager, okay, you give money to the asset manager and they manage it for you. They would have to be partnered with us. They would have to have a RoboSig track available to place your money that they are responsible for, right? We are just a software company. We are not registered, certified, in the financial markets. They are, right? They take the risk and they're responsible for the supervision. And those are the types of entities that we partner up with. It could be a managed account. It could be, if, for example, there's an asset manager that wants to create a UCITS fund in Europe, which is a mutual fund in Europe, right? They would do that and they would partner with us to trade the strategy for that fund, right? It could be the same with an ETF. It could be a managed account. It could be a number of different things, but that really is up to our clients. We we give our advice as to the trading, but we don't. Our software does, but we don't. We leave it up to them and how they want to do it.
So let's break it down a little bit further. Let's say for the person that's watching the show that isn't an asset manager, maybe they're not running a family office, maybe they're not a hedge fund. They're a guy or a gal or an entrepreneur that has their money placed with, let's say, an investment advisor or an investment brokerage. And that investment brokerage, of course, is investing the money in a way that meets the needs and the profile of that person. So let's break it down a little bit further. So is there a possibility that, if I want to get into the spot FX trading sort of portfolio opportunity, that I'm going to do that through my brokerage, who then is going to have a contract, or like you call a track, with RoboSig.
Yeah, you would have to partner up with an asset manager who is partnered up with us, right? That is licensing our strategy and our software, which, by the way, runs as a turnkey solution, right? I mean, we handle it. It's in the cloud. It can be done from anywhere. We can work with any prime broker for execution. And if you are an individual that wants to place money, you do have to go with one of our partners to do that.
Yeah, that makes all the sense in the world, because it's such an important sort of visionary idea that you have. And, with your background and experience, being brought on as the CEO with your seasoned technology expertise, I mean, it makes all the sense in the world, the business model that you're working through, because you want to give your system to the people that really understand the system and understand how to use it. Now, let's talk about this just a little bit, because I find it very interesting that earlier in the show at the beginning, you mentioned something about the alpha. Let's get into that a little bit more, because some people must have more risk tolerance than others with regard to their alpha. So let's talk about that, because that's pretty interesting.
Sure. So with RoboSig, we call them different products, right? But they really are the same track, the same strategy, just used at different leverage levels, right? Levels of leverage. There are true cash management track. It's not going to return, 10 to 15% a year. It's going to return 1 to 3% a year. And the purpose there is simply to beat interest rates around the world at the moment, which are, extremely low. And there's no leverage used at all. It's very, very low risk. And that's why, some of the cash management tracks that clients that want to use it for cash management, that's why they use it. If you want to increase your return, let's say, obviously we don't know exactly, right? But let's say between 8 and 12%, you would use a 4x leverage at the max. And in order to increase the return, you simply trade larger based on what your risk appetite is. I mean, we could trade a little bit more risky, but your return would multiply depending on, what access to leverage you have as a client trader with your fiduciary and bank that you do business with.
Yeah, that's interesting. Now, for the clients that use the RoboSig technology, the software platform, let's explain it to the entrepreneurs watching the show that maybe aren't, as elevated in their financial understanding of what goes on in the markets. Are they using RoboSig as part of the overall sort of umbrella of investments that they're making at the time? In other words, they might be using RoboSig because it has this specialization sort of in spot FX, and then they're using other systems for managing other parts of the portfolio.
It's all of the above, right? I mean, we've seen funds that are dedicated just to our strategy. Some funds are a fund of funds, for example, right? They may want exposure to currencies for their clients, right? They may want a currency overlay strategy as part of, other strategies that they are executing on. So it's whatever is wanted, we can do it, right? We just trade the G7 currencies spot, and as long as we have access to execution through one of our execution partners, or if somebody wants to use a prime brokerage of their own, we can do that as well, right? So all of the above, I guess, is the shorter answer.
Well, you do it all. What's the conversation sound like? When an organization reaches out to you at RoboSig, they talk to you or one of your team, of course. What's that conversation sound like? What's that first conversation? What's their need? Why they're reaching out to you to begin with?
Well, I think they have their clients, right? They are responsible for producing a return. And if you look at our historical returns, which our strategy has been trading live since 2016, various different clients, right? 90+% of our months are positive. We don't use a lot of there's not a lot of risk. There's not a lot of capital being used per what you're trading, right? There are times when it does, depending on what's going on in the world, it does require some leverage, but not as much as you would think, right? And also during COVID, while we did have quite a missile come at us during COVID, as the rest of the world did as well, obviously. But our strategy did not. You saw stock markets collapse. You saw other things happen. While we did have a slight drawdown, it was nothing. It was very, very stable. So people look at the RoboSig strategy as something to use to keep things stable, capital preservation. That also produces a very consistent return. We're not going to produce a 50% return. We're not trying to, hit it out of the park with that. We're trying to produce consistent returns that are very risk averse with the way it's being executed.
That's awesome, Dieter. Now, let me ask you a question, because 2022 is going to be big. You've got so many projects sort of on tap, but there's one project in particular that you told me about pre-interview that's very interesting. Let's talk about that, because that sounds very, very powerful.
Yeah. So one of the things that we are doing now is we have two partners in the UK, and we're building an asset manager in the UK dedicated to the RoboSig strategy. The RoboSig Incorporated is going to be a minority owner of it. We're still getting it off the ground, but the whole purpose of it is to have an easy way for European investors to place money more easy through a asset manager that we've already built. It's there, right? So it's easier for them than going to another partner that we may have. And there's money to be made. So that's one of the reasons we're doing it. And the partners that we're partnering with are world-class gentlemen, and been in the industry for a while. So big network, things like that. So I think I'm pretty excited about seeing where that's going to go.
Wow, it's so interesting, and it's so technical, and it's so fascinating. When I think about it, Dieter, and I'm thinking about now the types of people that you need to bring on your team. I mean, I would imagine you have veterans with experience, everything from maybe foreign exchange and, technology and capital markets to maybe online banking, law, and economics. So let's talk about the team. I mean, I would imagine you've got an incredible team, and it's just a powerful group that have been able to put this software together.
Yep. So one of our co-founders, Richard Prescher, right? This trading concept was his. We've known each other since we were tennis players at Northwestern in college. So, not to date ourselves, but it's going on 3 decades almost, right? And we came up through the same industry, a little bit different sides of it. He was an actual trader. Right? He was in FX options and FX futures trader, right? Throughout individual, right? He had his own trading group, various different places, et cetera. And he was very successful doing it. This strategy was something he, as a market maker, right? He required a risk solution that would help him manage his risk, because, if you're a market maker, you're required to provide liquidity, right? But you're taking risk doing that. So this was something very rudimentary at the time compared to now, right? That this general strategy is what he used at the time over the years to do that. Now, we've been good friends for a long time. So I remember him talking about it, years ago already, right? But in 2014, the real decision was made. How do we, on his part, how do we put this in a machine? Because in order to execute the strategy properly, you would need a whole team of PhDs, quants, people watching, all the different data. A machine can do it much more efficiently than a group of people, right? And so that was what he endeavored to do at the time. And so it grew from there. And the first live track started in 2016. And until March of 2020, where COVID caused problems for some of our clients, unrelated to us, but, collateral damage occurs when your clients have trouble. We had about $270 million placed on the strategy at one of our fiduciary clients, or a couple of our fiduciary clients altogether. And so we were a little bit of survival mode there for a while. But I think, earlier this year, we were able to push past that. And I think that, the future looks bright for 2022.
Yeah, there's no doubt about it. 2022 is going to be a remarkable year for so many companies that have come through this pandemic. Of course, we don't know where it all is going to lead from the pandemic standpoint, but in terms of entrepreneurship, the companies that have been able to make it through over the past couple of years and position themselves well for the future, it's going to be a very, very bright year, we feel. Now, when we think about what you're doing, and we think about sort of the way in which it was put together and the way in which, so many people are loving this system. Let's talk about security just for a minute. I mean, I just want to touch on it because the first thing that comes to mind is there's so many millions of dollars that are sort of being, placed either through the system or through another system based on what the system is sort of distributing in terms of its information. What's the security look like on the back end for what you're doing? I know it's in the cloud, but I would imagine you have to have some security experts working there as well.
Yeah, we do. We have a whole team that actually does that for us, right? It's all very locked down. And I do say it's in the cloud, but our primary engine is in I would call it a bunker, if you want to call it that. Obviously, I'm not going to reveal the location of it or where it is, but people that are industry probably know what I'm talking about. And, you obviously have to worry about disaster recovery. You have to worry about, different geographic locations. What if one goes down? How do you keep going? And how do you make sure that your trades, you don't lose them? If you don't know what's going on in the market, that's the worst place to be as whether you're an individual trader as a human or if you're a machine, right? So yeah, we have, these security assessments, they occur quarterly, annually. It's constantly being vetted for that purpose.
Yeah, it's great, Dieter. You do such a great job with that, of course, and people love it. Now, when I think about it, I'm going to ask, I guess, part of my naivety, but for lack of a better way to ask the question, I've been wondering about this with what you're doing at RoboSig for your clients. Is it a set it and forget it kind of a system where, you put in sort of where you want your client's money to go and then you set it and then you forget it? Or do they have to keep coming back to RoboSig and tinkering with it along the way? Or does RoboSig do everything basically for your clients?
First of all, set it and forget it. I love that. We just had that at we just had Christmas at my house, and so we had to set it and forget it. Turning the meat.
Right.
It's a great little device. Anyway, for us, it is. I mean, obviously, we have people that have to supervise this thing. Call it autopilot, right? It's not where we turn it on and then we go and go grab a beer at the bar or something like that, right? So, there's always somebody or a group of people or two that are watching this 24/5, right? And when the markets are open, and we've got people in Europe, we've got people in Chicago. So they don't execute any trades. They're there to react if something occurs, right? And it's usually a technology problem that would occur. If it's just the markets, they can't intervene because that's part of how the strategy works, right? So generally speaking, though, we calibrate constantly. But yeah, once it's on, it generally just trades on its own. And while we're watching it, you don't forget about it, but you do set it. You set it, but you don't forget it, right?
Right. You set it, but don't forget it. You right. Say that online trading doesn't have to be a game of uninformed guesses. And I like that so much. That resonated for me. And of course, you say, or your company says, it can be more akin to online banking, where you know exactly where you're putting your money, and can still expect to access it at any time you want. It's a very interesting sort of way in which you look at this software. Where did that come from? Where did that idea come from? Because it definitely resonated for our team here at DotCom Magazine.
Well, I think the big bet that RoboSig has, this is the bet that we make, and why it works, is that global stability will remain in some form or fashion, right? I know we've seen some strange times over the past couple of years and things occur, but look, we're still here. We're still doing business between different countries. So what we call is stability mining, right? Is really what it's our term. And I think somebody said it once. We thought to ourselves, it's a great term. It's exactly what we do. As long as the world economy, the global economy with the G7 primarily, right? There's still, as long as capital flows as it's going to, and it doesn't fall apart, which if it does fall apart, then we all have much bigger problems than RoboSig, trying to deliver some return. And as long as that flows, we will find, we look for the anomalies, right? Based on, that's the secret sauce that we have. We build these baskets of currencies, we look for the anomalies and we take advantage of those. And they are not, like I said, because it's not high frequency, it's a more cerebral mathematical approach, right? So you really, you just follow these rules, that the system follows these rules, and it doesn't have any emotion in it. We do want to evolve it to have some inline machine learning, which we don't do yet, but we use some AI to calibrate our system based on, things happen, that they change every month, depending on how much volatility there is and things like that. So.
Yeah, very interesting. I mean, it makes all the sense in the world, Dieter. And of course, I know you've only cut out a certain amount of time. I mean, I know you're getting ready for 2022. I mean, it's insane. Right. It's starting next week already. And, you're ending the year strong, and you've got big plans for this next year, of course. But I want to talk about entrepreneurship, and you've got a great entrepreneurial journey. I mean, you started your first business at 14, and then, from 14 years old all the way up, it's been, one thing after another that's you've leveraged on each, prior success and each prior learning experience. But one thing you mentioned, you played tennis. You played college tennis. I mean, you were a competitor, you competed at a very high level in the NCAA. So when we think about competing and we think about sports, let's talk to the younger entrepreneurs watching the show. So you play sports, you're in college athletics, you're grinding it out, you're practicing, you're competing, you're traveling around, you're fighting for the win. And then we think about entrepreneurship, sort of the same thing. So what kind of lessons did you learn from your competitive experience as an athlete, Dieter, that you brought over into the entrepreneurial world?
Well, I think there's two things that, so when you're an athlete, there's always the grind. I mean, that's inevitable. If anyone out there has a fantasy that you're going to be an entrepreneur, you're going to make, $100 million selling your company within a year or two, because it's an amazing idea, then could that happen? Of course, people win the lottery too, right? But it really becomes a grind for a while, and you really need to believe what you're doing. And if you do believe in what you're doing, the grind isn't that big of a deal. You get tired, that's it. So you rest a little bit and you keep going, right? But I think the difference between being an athlete and an entrepreneur is, as an athlete, there is only winning, right? You want to win. And as an entrepreneur, you want to win too. But I think the one big lesson over the years that I've learned is that you also need to have the guts to know when to walk away from an idea that isn't working, right? Because, and it's not about giving up. It's not about, you messed up, right? But sometimes, great ideas don't always turn into commercial successes, right? And the sooner you can recognize that for real, and you can move on from it and do something different, the better more success you'll see as an entrepreneur in the long run. Because, some people, they get stuck in these, ideas, and it takes 2 to 3 extra years of their life and, their opportunities away, when it really, you probably should have seen that coming, right? Now, having said that, you have to know if you're going to fight through something, even it doesn't mean it's easy when it works. It's a cycle, right? The first is the idea. It's a big rush, right? You're like, oh, this is the best idea I've ever heard. I can't tell you how many phone calls I have from friends or people I know, and they call me, I just came up with the best app idea. This is the greatest thing since sliced bread, and it's going to make $100 billion. Okay, well, that's the initial rush, right? Then you start looking into it. You see, okay, maybe my idea isn't as unique as I thought. But that's okay. I'm gonna do it anyway because mine's better, right? It's different. Here's why: because my skill set or whatever, right? People I know, and then you find out actually implementing it is harder than you thought, right? And that's okay. You keep pushing through it. You're an entrepreneur. You believe in this thing. You understand it's the grind. You understand you have to have a positive attitude when the world's falling apart around you. That's just part of being an entrepreneur. It's not glorious. There's nothing glorious about it. And then, you keep going, and right when you're about to get a little bit dejected, then there's a victory, right? Then it pumps you back up, and then you're like, oh, this is going to work for sure. And then you keep going, right? Maybe you raise some more money. Maybe you find a big client. Maybe, something you're building works the way you actually envisioned and you weren't sure it was going to, et cetera, right? But then, there comes this inflection point, in my opinion, right? Where you really, you're beaten up, you've been through this, it's been, God, years, right? And, what do you have to show for it? You're lucky if you're even getting paid a salary while you're doing this, right? That's a luxury if you're an entrepreneur, right? And the ones that get through that phase where it's just like, this isn't worth it anymore, maybe I should get a job somewhere, get paid well, sleep more, things like that. Then the ones that push through that are usually the next stage after that is success, unless you push too long with something that isn't working, right? But you have to just be honest with yourself. Be honest why you keep going, and be honest, that it makes sense for you only, right? Don't worry about what other people are saying. I would base it on some data, though. Don't just blindly believe in something. Base it on some kind of, depending on what the business is, right? Something factual, and then you push through. And then, once a business you're building is up and running, the challenges don't stop. I mean, then you're running a business, right? Growing a business, fundraising, hiring people. That's just the beginning. But what I'm referring to is, when you first have the boat, actually you have nothing, you have water, and you build the first boat that doesn't sink, right? And then it's out to sea, right? That's when you start running a business. That's why also a lot of entrepreneurs, they get the boat out to sea, and they're not always necessarily the best people to run the business at that point, right? They usually bring in someone to run the business because their passion is in this thing, right? They want to focus on either the product or they want to focus on other parts of it rather than, what leading the whole entire company, right? So anyway, those are the lessons I think I've come across, because people always say, well, what do you mean? You should have the guts to walk away. Shouldn't you never give up? Isn't that the whole point? Yes, you should never give up as long as you think it's going to work, right? But you have to be honest with yourself. I love it.
Yeah, Dieter, it's so powerful. I mean, for the younger entrepreneurs watching the show, rewind what Dieter just said. I mean, you got pretty much you received a Harvard MBA in about 5 minutes right there from Dieter. I mean, that's really great. There's so much to unpack there. I mean, just hearing that story, I'm going to invite you back on the show because I want to spend the entire 30 minutes unpacking what you just said. I mean, that's so powerful about the minimal viable product and putting it out there. And of course, we speak to so many entrepreneurs who, yeah, they're successful today, but they've been working on it 10 years. So I have this joke where I say, well, you're a 10-year overnight success, right? So they've gotten hit, left and right and up and down, and they've hit potholes and walls. And like you said, sometimes based on data, which of course you're a big data guy, it makes sense maybe, not to go forward and pivot and do something else. And there's this old saying that an early no is better than a long drawn out maybe sometimes, but you really have to have the right mindset to figure it out. And if you can't figure it out, like you mentioned, surround yourself with mentors, surround yourself with people who are super smart that can help you figure out what to do as an entrepreneur. Dieter, I'm going to bring you back on the show. We're going to unpack 5 minutes,
sure, that'd be great.
Full 30, because I love that so much. That was strong. Dieter, listen, I know you've only cut out a certain amount of time today. I love the fact that you looks like you've got Chicago over your shoulder there. I know you're in the area. I see the Stone Container building, and I think the Sears building behind you. And that's just
my wife painted that.
Is that right? That's beautiful. Yeah. That's beautiful. Well, we give a plug out to your wife as well. And of course, as entrepreneurs, if you have a great family and a great wife, that goes a long way. I know that because, my wife's way smarter than I am. So
they always are, and they're always right.
That's right. And they're always right. And they are. So Dieter, listen, thank you so much for coming on the show. This has been awesome. What you're doing at RoboSig as the CEO there is remarkable. I mean, they've been able to, your company's been able to do such powerful work in the space. I mean, it's remarkable what you've done with the G7 currencies, and of course, all the clients that love your software and your platform. Congratulations, Dieter. This is great. We're going to watch you and then bring you back on the show to unpack the 5 minutes of entrepreneurship in 30. Thanks so much for coming on the show.
Thank you. Appreciate it. It's nice talking to you, Andy.